Lyft reporting its first quarter results yesterday, and the stock jumped over 60% after hours. That was for a quick hot minute, an uptick in the rideshare's margin expansion. The release had that number at 500 basis points, but on the earnings call, the company's CFO, Aaron Brewer, corrected that number, said it wasn't 500, it was actually 50 basis points. The stock then pulled back its gains after the revision, but still up quite impressively. Joining us to discuss the rest of the results, David Risher. He's the CEO of the company. David, it's nice to see you. I want to get into the details of this last quarter. I want to get into maybe the Taylor Swift effect. I want to get into what's happening today here on Valentine's Day, because I know there's going to be some driver issues we should discuss. But I do want to start with, I don't know if it's a fat finger or what happened in terms of editing the press release, if you will, but how that extra zero got on there.
Yeah, I mean, look, it was a bad error, and that's on me. That's on me. But I don't want it to take an ounce of attention away from everyone at Lyft who busted their butts to deliver the best financial quarter in the company's history. That's really what I want to focus on.
I'm sure a lot of people do want to focus on it, and I know this is more of a short-term issue, but we are going to have Gary Gensler on the program literally in about 15 minutes. And one of the things that obviously the SEC looks at is when these things happen and whether they are going to fine companies, what they should be doing to try to keep all of these things from happening. Can you just sort of walk for those other CEOs out there who watch the broadcast, who think to themselves, you know, through the grace of God, go I. What is the lesson here for you? Was there something in how this happened that you think is preventable in the future?
I mean, absolutely. The lesson is, you know, measure twice, cut once. I mean, look, we had thousands of eyes. We've got a process on this that is nuts, and it is just it's a terrible thing. It is an extra zero that slipped into a press release. And, you know, thank goodness we caught it pretty fast and we issued an immediate correction. We got a new 8K out there. Super frustrating for everyone on the team, right. And people are really taking it seriously. I can tell you that.
By the way, how did you figure it out? I mean, did somebody call you? Did you get a text? What was the...
You know, as you're doing these earnings calls, of course, you've got things coming in at you, you know, from 1,000 different directions. And someone on the team noticed pretty fast that we were getting a lot of interest in the margin. And she looked at the number and you could just see her jaw drop. And, you know, we luckily, the only place the problem was one place. It just happened to be the press release. But as I say, we issued a correction in a second and moved on. Really, I mean, obviously, we're focused on customers. It was and a great quarter. It's very frustrating and a real error. Again,
let's talk about the quarter. Barron's has a headline this morning that says, "Forget Lyft's error typo." So you'd be happy to know that. How Taylor Swift helped the ride-hailing stock pop. Do you owe her a commission this quarter?
I mean, I tell you what, look, a lot of things went well, not just in the quarter, but in the year. We had our best financial year ever, you know, 16 billion, or excuse me, 1.6, 13.8 billion. Now I'm thinking typo on Taylor Swift, 13.8 billion in bookings, you know, fourth consecutive quarter of growth. And what I'm really proud of is the focus on our customers, on our riders and drivers. And that does include customers going to Taylor Swift concerts, who, by the way, and maybe we can talk about this later, tend to tip about 3 times more than other customers. So it was a great quarter. It was a great year across the board.
There's a lot of CEOs also who are focused on Taylor Swift. Do you think that's a repeatable situation over time? I mean, she's got her tour running, I think, through the end of the year. She's going to come back, obviously, to the U.S., and that'll run through the end of 24. But, you know, people like to put a multiple on these things. And, you know, is this a one-time event or not?
You know what? Taylor Swift probably wasn't the reason for our great performance. That's all about the team and the focus on obsession, customer obsession. But, you know, in the end, you know, when events happen, you know, you get a lot of people going to the concert. You get a lot of people coming home from the concert. We've actually done a really good job making sure that people get picked up quickly, you know, at the end of the concert. And it has a real effect. It absolutely does. So, you know, Taylor Swift will do her thing. But there are events, you know, just about every day of the year right now. And we're
so what is it exactly that you think you're doing right now that's actually bringing customers aboard? And when you think about it, is it a market share issue, which is you're taking customers who otherwise wanted to use Uber and they're now using you instead? Are they folks who were going to drive on their own or take a taxi or walk or bike, or what's happening here?
Yeah, you know what? It's a little all the above, but here's what I can say. We had more active customers, you know, than we've had, you know, ever in our company's history. We have more driver hours than we've had ever in our company's history. And so what that tells you is that our thesis, which is focusing on customers, obsessing on customers, can drive great financial results. And, as you know, we've had free cash flow for the quarter and are predicting it for all of next year. It's really all about that customer focus. And I know it's something that a lot of CEOs say, but we're really, really obsessed over it. And you can see it, 25% of our customers were new, but 75% were returning, right? So that kind of tells you right there that you've got a pretty good balance of folks coming in because they like what they hear and folks coming back because they like what they experience.
What's the status of the membership, Lyft Pink? I think are giving away some of that through one of the JP Morgan Chase cards. Are you seeing an uptick from that?
So I'll start at the end there. We've got a great partnership with Chase. And I will tell you, if you are a Chase card owner, particularly a Sapphire card owner, download the Lyft app, you get 10x points. And that's a big deal. But more broadly, our loyalty kind of approach isn't so much on a single product like Pink, although that's a good product. It gives you free priority pickup. It's a great loyalty program. It's more about doing things great every single day. I'll give you an example. We will pick you up to go to the airport on a scheduled ride. And of all the rides we get, and by the way, if we're more than 10 minutes late, we'll give you up to $100 back, no questions asked. So you can take, a different way to get to the airport. When we do that, we are less than 2%, making errors on that. Basically, 98% of people get picked up within that 10-minute window, and it costs us like 0.01% of bookings to do the remediation. Point being, we're really confident of our operational excellence and our customer focus, and I think that's really what's driving our results.
Wanted to also ask you about what's happening today. There's going to be a bit of a rider, or I shouldn't say a rider, but rather a driver strike that's going to take place. These are not just your drivers, but Uber drivers as well, over pay. What can you say about that?
So it's a strike that's been in the works for weeks, maybe longer. What I can tell you is the big issues that drivers tell me, and I hear from drivers all the time, around pay transparency, around understanding what the cut is between what they get and what we get, around deactivations. These are issues that we've actually addressed really well. And I'll be very specific. Last week, we released a driver release that guarantees drivers will make at least 70% after external fees of what a customer pays. And if they don't make it, we'll actually make it up. We'll literally rebate them the money. But by the way, the average is 88%. The average is 88%. So this 70% is a floor. My point here is that drivers are very vocal with what it is they want, and we want drivers to succeed. And so I think this strike, which, as I say, has been in the works since prior to this, it highlights the same issues that we've known about. But I feel really good about how we've addressed them, and I'll be interested to hear drivers' feedback, which so far has been incredibly positive about this.